Why rent when you can own? No doubt some of you are watching this video right now and you're saying a home is too expensive for me to afford. I will just keep renting. You know, I used to think that as well until I bought my first home. But I'm going to show you how you can purchase your first home too, even in today's economy when home affordability is at an all-time low and prices, well, they're on an all-time high, aren't they? But before we do that, let's go ahead and get started right now. Now, first of all, I want you to know that I can relate to what some of you are going through when considering purchasing a home. And I agree. There is no doubt that buying a home now is much harder than it was just 4 years ago. As a matter of fact, if you've ever said you'll never be able to purchase a home, you're part of the 61% of renters in America that feel the same way you do. Now, I have never seen 61% of Americans feel this way. And I wish it wasn't that way. And I really do sympathize with the challenges that those of you who are looking to purchase a home face, especially if it's your first home. Now, I'm assuming that if you haven't watched my channel before, when you clicked on the thumbnail, you did so because you were interested in owning your own home rather than paying rent each month. And so rather than just give you a "you can do it" pep talk,
you can do this. I know you can.
I'm here to also give you some free advice and help. But doesn't it always seem to come back to that pesky little thing called money? Well, that's probably the major reason we think we'll never be able to afford a home. Now, of course, affording a home is directly related to your income as well as several other factors. But I'm here to challenge many of you out there that can afford to purchase a home rather than giving your money to rent each month and not having anything to show up for it other than a roof over your head. Now, owning your own home is better than renting, but I'm assuming you know that. That's one of the reasons you're continuing to watch the video. So let's start with some basic information so we can help you. I'm going to use an analogy here, help you get on the homeowner's playing field. So first of all, a little bit of that information. First of all, we all know that rent isn't cheap. As a matter of fact, according to rentcafe.com, the average rental property in March of this year in the United States was $1,713, and it was only about 900 square feet. Similarly, here in Virginia, the average rental price was $1,892, and it was just slightly over that 9,000 square foot size. Now, I realize that there are different prices in different areas, but let's just let that serve as a baseline. Now, if you're single, you might not be paying that much because you might be in a smaller place. But if you're a couple or a family living in a rental or a rental home, the chances that you are living in that rental home is greater because of the size of your family, or possibly even living in a townhome or a duplex. And if you're probably paying a greater amount for rent than if you were living in an apartment complex. So let's put this into the real world living. Here's a house. Now, mind you, not a 900 square foot apartment. This house is currently listed for rent on Zillow right here in Waynesboro for $2,000 a month. Now, it's 1,302 square feet and it has 3 bedrooms and 1.5 baths. That's $2,000 a month and $24,000 a year. So I did a little research and I found that according to Realtor.com, the approximate value of this house was $247,000. So what if the home was for sale? Could you afford to buy it? Well, let's break it down. Now, one of the things that you can do to give yourself a ballpark figure when determining if you can afford a home is to use a mortgage calculator like this one. Now, as you can see, I put the $247,000 purchase price into the calculator along with just a 3% down payment of about $7,400. Now, if you're looking to purchase a home, I hope you're putting back money so that you can do that. So if you're not doing it, start right now. And with all the examples that I'm going to give you today, I'm even going to add the monthly taxes, the approximate homeowner's insurance, and PMI. That's the amount of loan insurance you have to pay on a loan if you can't make at least a 20% down payment on the purchase price of the home. Now, with all of those things being added in, you can see that it would be about $100 a month cheaper to purchase a home like this than it is to rent it. And here's the thing, you own it. You can do with it as you want. Fill in the blank here. I want to own a home so that I can blank. What do you want to do with it? What would be something you would want to do? What do you want now that you can't have in your current rental situation? Now you say, this home just wouldn't be my dream home though. I get that. It's probably not. But it is a starting point for you to get onto that homeowner's playing field. Just getting on the field is the first and major step, and often the hardest step as well. Now, additionally, you'll begin to grow equity in your home, which will further empower you to one day purchase your dream home. I mean, imagine living in your home for 2 to 5 years, and by the time you're ready to sell, you've gained another $50,000 to maybe even $100,000 because of the value of your home has increased, and you've paid part of the mortgage off, and you've possibly even done some improvements to the home. Imagine selling and having another $100,000 in hand to look for your next home, which will, of course, likely be a little better than the first one you bought. And you have that extra money now because you got onto the homeowner's playing field. Now at this point, I'll bet there are some of you out there that are thinking, I've been listening to the experts and they all say that the market is going to crash. I'll wait until the market crashes and then I'll buy cheap. Well, not that it can't happen, but if I had $1 for every time I heard someone say the market would crash, I'd probably be a millionaire. Hyperbole is intended there. But seriously, while there are several indicators in home prices increasing or decreasing, one of the greatest, if not the greatest, is simple supply and demand. Now tell me, do we have an abundance of homes on the market today? Nope. And what has happened to the prices as a result? They continue to remain high, or in some cases, they continue to go up. Now, if for some reason inventory significantly increases, prices could drop, but we're just not seeing those trends right now, or even in the next future year or two as well. Yes, things can always change due to outside factors, but from a supply and demand point of view, it's not likely to crash anytime soon. And if you've probably heard the saying, he who hesitates is lost, of course that means success comes from action, and those who delay may not succeed. And personally, I can tell you this, not taking a reasonable risk by pulling the trigger is probably something you'll wish you'd done. Pulling the trigger wasn't the easiest thing for Leslie and me to do the first time either, but we did. And that has made all the difference for us when it comes to owning the homes that we've owned. Now here's another example of the cost of rent versus ownership. Because maybe at $1,800 a month, maybe that was just a little bit too much for your budget. I get it. Now, this home is in a great neighborhood in Stanton, and it just sold for about $215,000. Now at 996 square feet, it's smaller than the first one we looked at, but it still has 3 bedrooms, probably more than your apartment, and it also has 1 bath. Now, this house wasn't for rent, but it sold for the $215,000 asking price, and since it didn't go over the asking price, there probably wasn't as much competition for this one. Now, assuming you had good credit and could put 3% down with taxes, homeowner's insurance, and PMI added, your payment would have been around $1,650 a month. This means you could probably earn this home if you earned around $60,000 a year. And it would have been your house. And here's its twin, right beside it, that sold in a totally different transaction. This home was totally remodeled and it sold for its asking price as well of $225,000. Now it has the same square footage and bedrooms and one bathroom as its neighbor. And again, for $80 more per month than the previous home at $1,733, a new owner has gotten themselves onto that homeowner's playing field and they have a totally remodeled home. Again, are either of these your dream homes? Probably not. I mean, they've only got one bathroom, right? But remember, it's about getting onto the homeowner's playing field. You know, I thought I grew up in a mansion with 1,377 square feet of finished living space with 3 bedrooms and just 1 bathroom. At the time, I know that I didn't even realize that there were actually homes that had primary suites with their own bathrooms. Now, to be fair, we did have a bathroom and a shower in the mostly unfinished basement, which my brother and I were always relegated to use when taking a shower. But like I say, it's not something that I even knew about when I was young. Now, I know that times have changed, but owning will give you so much more in both the short and long terms than renting will. That's why I say that if it's possible for you to own, I highly recommend you do it as soon as possible. Now, at this point, I'll bet there are some of you out there that are saying, I am ready to buy, but man, the interest rates are so high right now, I'm going to wait until they drop so I can get more house. Well, if you're saying this, I would emphatically tell you, don't wait. First of all, although interest rates are higher than we've seen in the last 25 years, they are historically low. Imagine paying 18% like we did back in 1981. But here's the thing. If you wait for the interest rates to go down to 6%, which they probably won't anytime soon, you're likely to find yourself paying more for a home. Why? Because competition to purchase the home will increase. And in many cases, it's just going to drive the price of the home up anyway. Why? Because if more people can afford it, more people are going to try to buy it. Also, if you were to wait for the interest rates to go down, let's say just 0.5% to 6.5%, you'd still only save about $80 a month anyway. So my question for you is this. Not that $80 isn't important, but is it worth you losing and getting a home you like and not stepping onto that homeowner's playing field? Is it worth paying a higher price later because of the increased competition? How much equity would you gain if you got into a home sooner versus later because you just tried to save $80 a month? I mean, do you think you'd gain back more in equity over 1 year than the price difference of $80 per month that totals $960 for the entire year? Yes, you would probably definitely gain more than $960 in equity. And that's why now is the time to get out of a rental and into a home if you can. So let's take a look at it from one final scenario. Maybe you've got a small or young family and you're already paying rent in a rental home. Now, whether you are or not, for this example, let's go to a third location in the town of Lexington. Now, Lexington's about a third the size of Waynesboro or Stanton, so with lesser inventory, there tends to be more competition for rentals. Well, if you were looking for a rental home and lived in Lexington, you might be looking at this home currently looking to be rented for $2,300 a month. Now, once again, Realtor.com's valuation of this home puts it around $312,000. But this home also has 1,600 square feet, along with 3 bedrooms and 2 baths. Additionally, there's a nice deck on the back, and because it's a relatively new home that was built in 2018, most of the inside is updated and it's in great condition. The rooms are a little larger than the last home as well, and you'll have room to enjoy life with your family. Now, if this house was for sale at its approximate value of $312,000, we'll say exactly $312,375, your payment, having put down just 3%, including taxes, homeowners insurance, and PMI, would be about $90 more than you would pay if you were to rent it. You'd probably pay about $2,390. Now, I don't know about you, but I could probably find a way to find $90 additional in my budget to get out of the rental scene and onto the homeowner's playing field. And remember, when we were talking about equity earlier, well, here's the thing. You don't know this about this home, but it sold in 2021 for $259,000. 3 years later, it already has an estimated value of around $312,000. That's a $53,000 increase in only 3 years. And if you had purchased the home in 2021 and you wish to sell it now, you'd have an additional $50,000 to use when purchasing your next home. That's what I'm talking about when it comes to getting onto the homeowner's playing field. If you get in as early as you possibly can, you can continue to use the equity you make on each home to purchase another one. And if you do it right, making sure not to overspend for a home, after a few years and several home purchases, you can even afford to pay cash or certainly a considerable amount towards the purchase of your dream home. But here's the thing. You have to take that first step onto the homeowner's playing field. Saving towards a home is very important. And yes, it's something that you should be doing. But don't wait too long. Pull the trigger and buy a home at the right price that you can afford. No, it probably won't be your dream home, but it is a start. That's why we call them starter homes. Now, once you're a player on the homeowner's playing field, you're in the game, and you'll be happy that you are because you'll have something that is yours. Yes, there are responsibilities of home ownership. You can't call a landlord when you have a leaky faucet, but there's something about home ownership and owning your home that makes you very proud. And here's the thing, especially if it's your first time to purchase a home, you'll need someone to help you navigate that playing field. Even if it's not your first rodeo, there's still a lot of things that a realtor can help you with that you might miss that could cost you thousands of dollars and wonder why you ever left renting. Now, of course, I know a couple of great realtors and people that would love to help. You know, we're so thankful to have been able to have helped so many people over the years, some of whom have been first-time home buyers. We've loved helping them find a home that fits their budget and fits their needs. So, what are you waiting for? An invitation? Well, here it is. Pick up the phone and give us a call, shoot us a text, or send us an email. That information's all in the description down below, and we'll be happy to help coach you through the process of buying your next home. But until next time, we will see you around town.